Hello everyone, my name is Daniel, I'm the founder of Stein Investments, and today I'd like to introduce some methods of how to select the right currency pairs to trade with our tools. I apologize upfront for any speaking errors because English is not my native language, but I'll do my best. So let's start with the currency strength analysis we do with our most popular tool, FX Power. And some of you might know this overview, or kind of this overview I post regularly with the morning briefing. In this constellation I dropped gold because it's a separate topic, and I'd like to fit the charts within the screen, which is a bit limited for the YouTube videos. But anyway, so how do we do the trend analysis? And I'd like to start with the US dollar here, which we make a bit larger. And you see we use 3 different analysis periods. The first one is the long-term trend, the 1 week. Then we have a mid-term trend analysis considering 1 day of data. And then we have the short time dynamic, which is important for the timing of the entries and exits. And therefore we need 4 hours of data. And as you can see, the midterm trend is on the opposite side of the long-term trend. So the long-term trend is weakening. It's already almost neutral here. Neutral is the 0 level here. And the midterm trend is already on this strong, almost extreme opposite side here with plus 40. The 4 hours dynamic is a bit volatile here, which might be due to the London opening that happened almost an hour ago. But you can see there is some serious upwards dynamic. I wouldn't short the US dollar here because we can clearly see it's going upwards. So if we identified one currency that's going upwards, we just need another one that's doing the opposite side. And as we can see here on the right side, the Aussie dollar and the Kiwi are pretty perfect for that. And so just check the lines. Okay, the midterm trend dropped here. The short-term dynamic is pretty obvious weak, indicated weakness for the Aussie dollar. Let's see if we can get the same here. Yes. So in my opinion, shorting Aussie dollar and the Kiwi against the US dollar is one of the best options. And so I'd like to see if you can confirm that if you check one of these charts directly. Yeah, that's pretty obvious. Unfortunately, we are sitting right up a support level here. So is the question if we can break through it straight away. I doubt it, obviously. I would wait. But it's still a good combination and might offer a better entry scenario at a later point in time for today, maybe at the New York opening, I don't know. But I wouldn't short this right in front of the support levels here. It's good possible that we see a reversal move until here. We'll see. So here's a quick follow-up on my last analysis you've seen a few seconds ago regarding the Aussie dollar and the support levels. And while cutting the video, the market moved on and the price reversed exactly as expected. So that states first the precision of FX levels, which avoided an unnecessary trade at this level here, right above the resistance, above the support levels. And it makes also clear why you need precise trading tools to avoid costly mistakes. And that's what Stein Investments stands for. We are happy to help you in this, and we are looking forward to your feedback when you're using these tools. So now let's move on with the next analysis. So the second analysis method we use, and you'll probably know from our morning briefing posts, is our volume power overview, which provides some interesting insights into the real retail trading volume we record and analyze since 2018. And it's awesome what you can reach with this data, what you can achieve with this data. So anyway, let's look at the numbers. And what we are looking for is our currencies with a rising interest. So where people open new trading positions. A rising interest is always an indicator for stabilization. So we usually get some pretty stable trends if the interest in some currencies is rising. So in this case, it's the British pound and the euro, where we can see a rise in the total trading volume. And the question is now, what's the direction of these new positions? And it seems to be short in this way. Yeah, the euro net long volume went down, dropped by 2.4%, and the British pound dropped by 1.1%. So both are weak volume-wise, fueled by rising interest in euro and pound short positions. And now let's have a look. The strength doesn't confirm it yet. So we need to be cautious. If the volume indicates a trend, I'd monitor both of these currencies and check for possible entries, because when this starts moving and the interest rises further, we'll see a long and stable down move in both currencies. So at least check the major pairs, euro dollar and pound dollar, and then we'll see in which direction it goes. What we can also see is that Aussie dollar and Kiwi, as analyzed in the previous FX power charts, are pretty weak or quite some time now. But the volume, the retail trading volume, doesn't confirm it. So the question is how long this will last. Yeah, there is from the real retail trading side no interest in opening new positions or new short positions to cover this trend. So that might suit or fit the analysis we made for the major pairs, where we can see that they are currently sitting on support levels, and it may change during the day, but currently there is no volume covering this downtrend. But euro and pound are definitely worth to watch over the day. The third analysis method I introduced last year with some morning briefing posts. It's more an experimental one, but provides also some interesting insights because it combines same data or same tools in a different way. In this case, we have a short-term trend analysis, a mid-term trend analysis, and a long-term trend analysis, as you already know from the first method with solely FX power. But in this case, we combine the power information with the net long change, ignoring the total volume, just the net long change, and check how much potential is left in the specific currencies. So green is always indicating that there is a lot of potential left for an entry. If you see red numbers, which are usually above 130%, you can adjust it in the settings of FX Dynamic, then I would say it's better to exit if you have positions running. So we just need to check the options we have and which are in line with each other from information-wise. So we have a weak Aussie dollar combined with a negative net long. This is a clear sell indication for the Aussie dollar, and then we need the opposite side for a trade. In this case, it would be the Canadian dollar with a positive strength and a positive net long change. Also, the Japanese yen provides some serious strength and positive net long change. So we can go to these charts directly to see what it gives. Yeah, Aussie Canadian it's clear here, it's the 4 hours analysis, and you can see during the last 4 hours it went down by much. And then let's switch to Aussie yen. It's the same. So yeah, unfortunately it sits directly above or inside an SR level, so might be not the best spot to enter this trade, but the indication is clear and you can see our analysis is perfectly correct. So this is another option to check either for intraday scalping trades with the 4 hours analysis, or for even swing trades with the 1 week analysis, where you can see totally different numbers. Gold is rising pretty strong, the euro as well. Aussie dollar is pretty strong, but only for the long-term analysis. Short-term, so for today, it seems to be pretty weak. So if you like, templates for all these analyses are usually provided via our central Stein Investment page on MQL5. And if you don't find them immediately, just drop a line and I'll assist. Wish you all the best, have a great day, and happy trading with our tools. See you in the next one.